What's going on, everybody? Welcome to a capital hungry webinar on the crypto markets, mainly Bitcoin, Ethereum. We're also going to touch on XRP individually as well. I was talking about this in the previous webinar, but with how the crypto markets are still a relatively new and emerging market and becoming more and more mainstream, we have seen that it still has a high amount of potential to go through this psychological market cycle that majority of new trading instruments or markets do go through at one point or another within the history of their potential activity in the market. So we've seen this with stock market crashes. We've seen this with corrections on gold historically. We've seen this with commodities such as oil, where the reason why I'm bringing those up, how this various psychological cycle where smart money gets in from the stealth phase at the very low prices in the mean price range there. Then you have the awareness phase with the institutional investors. The public really starts getting in very late during the mania phase with greed delusion, and looking to jump in with the media attention and obviously enthusiasm. And then you can see as you reach this new paradigm, you have a bull trap, a potential return to normal, and then you come back to the return to the mean price on average. In the previous webinar, I showed you guys this example on gold, oil, as well as the US stock market index. The reason why I showed you guys on those various trading instruments or markets is because those are specific trading instruments, whether it be the commodity, oil, precious metal, gold, that has had historical value and trading activity for years, decades, right? And even those pillars of economics and fundamentals have gone through this cycle at one point or another, or eventually do repeat these cycles, whether it be the stock market correction we saw, obviously, in 2020 with the pandemic crash, even though it wasn't as aggressive in terms of the fear mode bringing us a return to the mean price, we did have this similar setup, right? So what I want you guys to understand is when you're looking at the crypto markets, you're seeing something very similar happening. You're seeing that when you're looking at the stages, this area on Bitcoin historically was the stealth phase. Even past this, I just wanted to show it on the screen here. But the stealth phase on Bitcoin was really when it was in the hundreds of dollars, just nearly peaking $1,000 a coin. Then you can see as we started to enter the $8,000 to $10,000 price point, that's when awareness started to grow on the overall crypto markets, whether it be Bitcoin, Ethereum, or anything else, right? Then we saw this massive upside move with the media attention, enthusiasm, greed, which is what we like to call the mania phase. You would notice this because in social media, you see all these crypto gurus coming up. You see it on you see it on news stations like CNN, CNBC, starting to talk about crypto investing. You see it on various advertisements, various brokers offering more and more trading within the crypto space. And this is when the public really starts to get into this trading instrument here being Bitcoin. And then we reach this paradigm, this all-time high, where we thought we were going to continue to go up higher and higher, right? We've also already had this a deeper correction, which I see as the bull trap, and where people, again, especially the mainstream media, the mainstream retail market traders, the 99%, they see it as a bottom and they start to jump in and pool their money in further, thinking we're going to have a return to normal being the paradigm and continuations to the upside, where instead we'll have mass market fear come in, where you have to understand a lot of the smart money investors or institutional investors who were really into crypto early during the stealth and awareness phase have already exited out positions for the most part in this area of delusion in the paradigm point. Okay. So when you're looking at that with also the recent fundamentals, you'll understand that a lot more institutional trading activity is coming to the crypto markets. You're seeing these various Main Street banks, such as Citibank, Goldman Sachs, bringing in crypto trading desks, bringing in crypto trading bringing in crypto trading instruments, and allowing crypto investing for their investors, for their users, for their customers. Okay, so with what I'm seeing here, with the amount of media attention, the amount of retail traders that have been pooled into the crypto markets, the fact that it's still a new and emerging market, technically, if we cannot break that paradigm price point or even come towards that paradigm price point, and we start to also shift out of this bullish market structure that's just developing here, and we also see that institutional traders want to get their price points of interest where they have the power to bring it down to their price points of interest, we can see continued massive profit taking move by smart money and the institutional investors back towards these return to normal highs, which will in turn also drive price down, as they'll also jump on the short side to clear out all of the media attention and public buyers. We'll just call them the public, and bring us down into a fear mode on the crypto markets, coming down towards a median in price, which could possibly be back into the 20,000s, even 15,000 price points. All right. So I just want you guys to understand that based on market cycles, economic cycles, and psychological investing cycles, and especially with the crypto markets being new emerging markets, and especially with the timeline and what we have seen within the mainstream media, we have seen the stealth phase. We have confirmed the awareness phase. We confirmed all the media attention, enthusiasm, public greed, and public starting to enter the crypto markets with minimal knowledge. You guys were seeing when Bitcoin was first pushing up during this phase here, you were seeing your mom, grandma, friends, family, cousins, news outlets, social media, everybody was talking about crypto, right? So we, in my opinion, are past the greed delusion paradigm phase. And if we cannot break above these previous highs at 55K to 60K, we will not have that full return to normal. This ends up being a bull trap where in this whole area, as well as scaling back up to the highs, you're just having the public continue to pool into liquidity within these markets. And we still have yet to see a real mass fear stage in return to mean stage on the crypto markets, and especially Bitcoin. Does that make sense for everybody so far? Or do you want me to go through that one more time here? Right? It's no different if you go to the daily chart and you go to obviously, and you go to Ethereum, same idea. And obviously Bitcoin's the easiest one to understand here. Okay, does that make sense for everybody so far? So again, we're just comparing it. Let me go through it one more time. We're mainly comparing it to a psychological investing cycle that all trading instruments will go through one point or another through their active trading journey. Okay. If you guys were to identify, the stealth phase, where would you put it? What price points here would you put it? Let's go first through marking out these phases and what we've seen happen and what we've seen haven't happened yet. Huh? Is this a good area to put the stealth phase? Right? Fair enough. You guys agree with that? We're going step by step here. Stealth phase, the takeoff, before you really have the first little sell-off or any bear trap here, which was more here, in my opinion, at the awareness phase. So I'm going to put the awareness phase here. Okay. This whole area is the awareness phase, stealth phase, the takeoff point where smart money is really getting their hands into the Bitcoin market. We could even zoom out more. It'd really be at that like $500, $1,000 price point. Okay. Then you can see this is also the mean line of price. average actual growth line of price. We're just going to essentially drive that straight across here. This is going to be our mean, average, median line of price if we were just to have continued average growth instead of having this investor pump just to make the smart money and institutional traders more money and to get the public pooling their liquidity into this trading instrument being crypto before we really have the sell-off and the money of the public gets taken and gets put into the hand of the institutional investors and into the hands of smart money. That's how it always works, okay? Now, you can see when, especially during 2021, were you not noticing a lot more social media coverage, mainstream media coverage, blog posts, websites, Forex gurus, whatever it may be, a lot more media attention around the crypto markets compared to when it was sitting from these lower price points, right? So I'm going to put the media attention really starts coming into play here. Make this a bit smaller. Then you also have the public really starting to pool into here. Over here, smart money, institutional. Okay, public entry over here. Now, as you're pushing up and continuing to the upside, you can see a similar pathway of price. Besides this minor little pullback or pullbacks here, you really just had consistent gains from after the stealth and awareness phase, where those institutional and smart money buyers are already in. And from that point, you go well above the you go well above the mean price point of interest here and have this excessive increase in price. The same time the public is pooling in their liquidity into this trading instrument, helping to push the price up even further with the media attention, enthusiasm, public pooling of liquidity, greed, and delusion, which takes us all the way up to here at a new paradigm. Now, you can see that you have a denial stage at the paradigm, which was here, that ends up having a pretty aggressive downside move, but it does not come to return to the mean. It comes to about this 32K previous price point of interest. And guess what? This is what I would classify now as the bull trap stage so far, where the public buyers who are in from here, who never got to take out of here, who potentially got wiped out of the market during this denial stage. The denial stage isn't for the enthusiasm, greed, delusion, denial, bull trap, and fear. That does not impact smart money or institutional investors. That's all describing the emotions of the public investors. Does that make sense? Okay. So as the public is starting to pool into this trading instrument with more media attention that they're following well after the stealth and awareness phase, you can see it's greed and delusion that brings us into this new paradigm. Have you guys not seen that crypto gurus or anybody who is an avid crypto trader has only been ever bullish on crypto? You guys ever notice that? What do you call that in a market? Delusion, is it not? Have you guys noticed any crypto gurus, the majority of crypto gurus, the majority of people who trade crypto, what was their motto? What is the crypto trader's model? To the moon. And also this. Is HODL or hold, is this an effective investing principle or an effective trade style for any day trader or any? Would you say HODL or hold on any other market? Would you say that on, besides the stock market, but would you say that on gold, any position you're in, hold it? Would you say that? Would you say that on GJ? Oh, just hold it. Don't worry about anything else. Just hold it. No. So what mentally and psychologically, what is that? It's a mix of greed and it's a mix of delusion. as you're going up into the new paradigm, right? Greed, delusion. As you hit that new paradigm, this downside move, which ends up being denial, you see this drop in price from the new paradigm, which the public see as denial. How many people said, oh, it's just a dip. As soon as the dip is back, jump back into crypto. It's all good. Once the dip is formed, we'll get better prices. We can jump back to HODL mode. Don't worry, hold the dip. Don't worry, buy more in the dip. Scale in the dip. That's all you saw with these majority of crypto traders on various forums, on various social media platforms. And those are the people that I use to identify the public, because the public is always much dumber and much more behind than the smart money and the institutional money. The public is getting influenced by the media, and the public stays in the trade or in the investment because everybody else in the public circle is also jumping in, and they all ride a greed train mixed with delusion that gave us the HODL concept on crypto. Right? Now we also saw this base formed in a potential bull trap here, where the crypto investors who are already greedy, who are already delusional, who are already in denial, who are already in a HODL method are thinking we're going to return to normal. The return to normal for crypto investors would be coming back into these highs and even higher, to the moon. HODL, we're going to the moon. We're going to 100,000. Okay, now I'm not saying that it's not possible for crypto to continue up or Bitcoin to continue up, but we would need to see a couple of things. One, I would personally need to see a technical break above the previous highs. That will show me the return to normal is actually happening, and we're also past the denial stage, and we have the potential to continue higher. That's just market structure, right? But have we returned to normal or returned to those highs yet? Even with all this liquidity generated here, even with all the buyers jumping back in, even with some of these aggressive movements on Ethereum or on Bitcoin, have we returned to those high points or to the paradigm yet? The new paradigm? Clearly no, right? Okay. So now, with another key aspect I'm seeing is all of the Main Street banks, not mainstream public retail traders. I'm talking about Main Street banks. What I mean by Main Street banks is what they call it is like the banks that run along Wall Street. You got your Goldman Sachs, you got your Citibank, you got your Morgan Stanley, and so forth, right? They're not central banks. They're not the smart money or the prime of prime, but they are Main Street banks that have tons and tons of clients, both on a public level and on a higher investment level. Okay, what we're seeing is more and more Main Street banks are getting involved and want to offer crypto trading to both their public investors and also to their own smart money investors as well. Whenever I see that regulatory bodies or institutional bodies or political or government bodies want to get their hands in a certain trading instrument or a certain industry, there's always a heavier price setup. Okay, there's always a heavier panic within that trading instrument. So what I see is that if technically speaking, we cannot come back to these highs, that means that if we start to notice a shift in this technical bullish structure and we break below, maybe double top here technically, and we make our way back down to the bull trap price, that is fear starting to really enter the markets and entering the potential fear stage in this area. Fear. Okay. After that is capitulation. Who's this messaging me? Okay. For those of you who don't know what capitulation means, it's basically like the public giving up, surrendering. They can't fight it anymore. They can keep trying to buy the dip. There is not going to be a dip. It's just it's gonna pretty much take them out. They're gonna have to surrender to the market in that sense. And then you have the return to mean price and the return to average price, which we could see roughly at possibly 15 to 20K would be the mean return price. Okay. Now, this doesn't mean that the crypto markets would forever die. This just means that when we're coming back to our examples here, this is an example of net equity flows and the same example of the psychological trend, but this is on S&P 500, the US stock market index during the 2008 financial crash. All right, same thing. During the low points is when you'd really have smart money and institutional buyers in. Then you have the optimism, excitement, and during the excitement and thrill and euphoria stage is when the public enters. Then you have the bull trap here, anxiety denial stage, and the capitulation coming back all the way down to a despondency stage. So I don't think that crypto markets are going to die and fade out, but I do think that if we cannot return to the normal and break that price point, and then we break below the bull trap area, we're going to come to the real price points of interest that smart money and institutional traders are going to want to get in. The institutional traders and smart money, after profit taking and shorting from these highs, they're going to want to buy when the public is in despair. How many times have you seen a crisis lead to opportunity for the rich? What's the difference going to be here? So when the public is in a state of capitulation, which means they can no longer resist, they can no longer fight back. And when they're in panic mode, when they're in desperation mode, in fear mode, and they enter a state of despair, well, guess what? That's a new potential blow off phase. And we go back into a stealth phase, back into the stealth phase again, where it's not like the market vanishes or crashes down to zero. No, I'm not saying crypto is going to go to zero. No, I'm saying we could easily come to a return mean price 15 to 20K, have all of the public get completely shaken out. Because think about if crypto came from 60K to 15K Bitcoin, you think the public would still be talking about it after seeing a massive crash like that? You think any retail trader who has minimal knowledge on the markets or psychology or investment cycles, you think they're going to say, fuck, man, I just lost all my money in crypto. Maybe I should try again now when it's completely crashing in a state of despair to the public? Fuck no. That's when they stay the fuck out. And that's when smart money and institutional traders get back in. And then you have the same thing repeat again. And then what did we see in 2020 on the stock market? A crash that came down not to these same lows, but to a mean price. Because the mean price is going to continue to extend on an average regardless of these crashes, but you have a return to the mean price. Let me give you guys an example. Let's go to US 30 here. Even though this is just showing you guys on S&P, US 30 is the same thing, okay? And this is a US stock market index with hundreds and hundreds of million and billion dollar corporations involved in it that is linked to thousands and thousands of jobs and has so many further connections in the financial market and the real world, which the crypto markets do not fucking have. So for people who think the crypto markets are untouchable, they're going to be in for a big surprise if we don't break above these previous highs. I would personally only see safer buys long-term if we were to come above the new paradigm price, which I'm not too adamant about seeing. I don't think we're going to really see that. All right. But anyways, let's go here on US 30. Let's go to the weekly chart. Let's clear this out. Let's go. If we were to come from here and just draw a mean price line, right? Right, mean price with average gains. I'm not trying to make it exactly on that, but that's what I'm trying to essentially say. Okay, same stages here. Let's zoom in here. We're going to look at 2008, the financial crash, but the lead up to that point, and the same thing we're going to look at here. If the stock market can't avoid this investment cycle and psychology cycle, and if the oil market can't avoid that, if gold can't avoid that, what makes you think crypto is going to avoid that? And guess what? Before the stock market crashes, and even before it crashed here, before the pandemic happened, I don't know if you guys remember in 2020 when Trump, 2019 and 2020, when Trump was in control, what was Trump saying every single day as we were pushing up in the media? What was he saying in the media every single day? What was Trump talking about every fucking day before the crash happened? You guys remember? No? Nobody remembers of Trump days? All he was talking about was stock. If you guys ever look at media reports a month prior to stock market crashes, all they talk about is stock markets are healthy. Stocks are looking great. Stock market at all-time high. The media influences more public figures to get into the stock market at these high points. Okay, but let's look at this. Let's look at this. Let's bring it back. I know this stuff blows your guys' minds. Trust me, it's very interesting stuff to learn, right? Whoever was in the public that is in here, who's riding on the media support and attention, who's riding well after stealth awareness phase and smart money and banks are in, who's continuing up on greed and delusion, reaching a new paradigm, not wanting to exit the stock market based on denial, then seeing this bull trap in a dip being created. So they for sure don't want to get out because they think we're going to return to the normal and return to the new paradigm. And then the stock market crash of 2008. Fear. Fear, capitulation, return to mean, despair. Remember, despair, all of these emotions here is for the public. When the public is in despair, guess who got back in here during the blow-off stage? Guess who got fire sale prices on the stock market? Smart money, banks, 1%ers. Right? So boom, very aggressive drop side bull trap. You think that's it? Fail to return to normal, the real crash. Right? Now, if I completely take this away and go back to a Bitcoin chart, what do you see? What do you see? Same fucking shit. All right. I just wanted everybody to first understand that from a macro perspective, but before you start going balls to the wall with Bitcoin buys and Ethereum buys, right? We might not even come all the way up to these high points. So now let's delete all that. Let's go look at some technicals here, all right? Oh, this is US 30. I was like, where are my lines? Wait, where my lines go here too? Oh, okay, okay. Let's go back to Bitcoin. All right. So you can see from this bull trap stage, we're having this upside move, but we're retesting this order block low area and now starting to get some potential stronger bearish price action. But even if Bitcoin was to come, okay, now on intraday trades, if we were to hold this bullish market structure, which I'm going to zoom in, yes, we can have the potential to go back into those quote unquote paradigm prices. But as soon as you see a shift out of this corrective structure, this down to back to these lows is going to be the fear stage. This area at 52K or even below 47.4 is high risk, high reward sells, following what I'm telling you guys about the investment cycle and the psychology cycles that all markets go through at one point or another. I just showed you guys an example of the stock market. And we've seen that multiple times before as well. Okay. So now, right now, we've had this bullish market structure being respected for the time being. But what I'm essentially going to start looking for is either a double top at the 50K price point area. I'm just going to round this off to 50K flat. Right? If we double top at 50K flat, high risk, high reward sells. But if we start to shift out of this structure in this fashion, I'd be scaling down sells to at least revisit the bull trap price point at around 30K flat. I just didn't round off these key levels, but around 30K flat. Okay. I'd be looking for sells below here, even with aggressive pullbacks that might fake out the retail and public community. I'd still be looking for sells in these areas. Bitcoin, this analysis I'm giving is more macro, higher time frame analysis. So either if we come to 50K double top and then start to scale in accordingly to 30K. Bang, 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 bang. Safest sells is going to be where? Where's the safest sells going to be? And you can still grab great sells if you break below that area. It's going to be below the bull trap price point, which is 30K. And even if you go to 30K, remember, we're potentially targeting 15K down here. Okay. This is the same pathway of price I see on potentially Ethereum and Bitcoin. Yeah, going to 14K down there. Going back to a mean price point. And then once the despair stage is going on, the blow-off phase is going on, smart money and all those institutional hands that are getting into the crypto market, then they'll get in from those lows at 14K, 15K, and then they'll run that when the public is out and they've panicked out, they've been feared out, they have been forced out. They have no other way to even get back in because they lost all their money. This crash is way too aggressive for them. It canceled out all the bullish upside moves. They're way too scared. Then smart money is going to get in again, and then we'll see Bitcoin or other crypto markets continue bullish for like the next 5 years, probably next 3-4 years. Obviously, it's going to have its market waves, but it'll be majority chugging bullish back up to those euphoria paradigm highs and potentially higher, just like we see with the stock market, just like we've seen with anything else. Okay, so now that's what I'm looking at on Bitcoin. I could only safely, when I'm looking at market cycles and understanding how much media attention has come to Bitcoin, how many dumb fucks are in the crypto markets and their principles with HODL, buy every dip, keep holding, right? I see that crash coming. I don't know if you guys remembered, but I called this big short, but my mistake was not understanding that was still only the denial stage and the bull trap stage being set up. I already thought we were I already thought we were going to be in the fear capitulation and return to mean stage, but I forgot about this part, the return to normal part. Okay. So whether it be Ethereum, whether it be Bitcoin, I would not safely advise anybody to be buying this unless we broke above 60,000. Otherwise, what I'm essentially starting to look for, even if we peak, okay, if we peak higher than here, still stay out of buys. But if we double top around 50K flat, 50K flat's a nice little round price point for some shorts by some institutional traders to get all the public out who are pooling back into this dip, who thought we're going to be returning to normal and higher, who've still been holding during this stage, who held through this, who scaled in more positions, who took out another loan to buy some more Bitcoin. This is what I'm looking for. Bang, bang, bang. High risk, high reward sells, 42K, below these price points of interest here, safest below 30K. I would only see buys two ways. Number one, above 65K, and where would be the second place that I would want to start taking buys? Where would be the second place that I want to start taking buys? Whenever we enter the despair stage for the general public. Once we actually have, if we have that significant crash and we come all the way down to like 15,000, even 10,000, then I'd be taking buys there. I'll probably hold those buys for a few years. The public will be scared out. The media won't be talking about anymore. Guess where it's going to go back into? A stealth phase where the public's not going to be talking about it anymore. They lost all their money. The media is not going to want to talk about it besides the crash that happened to cover, oh, crypto crashed. They're not going to be talking about it in an optimistic way anymore. Understand? Same thing on Ethereum. Ethereum, I'm actually looking around if we come up to even this price point here. And the same thing where I'd only take buys either above 4,400. And same type of idea. If we do not return to the normal, I see us coming back down to the mean price, which we just do something like this. You know what I mean? Mean price would be. And then having the real crash down to like 1,300, even back down to 1,000. And then continuing back up for the years after that. Okay, so Ethereum, high risk, high reward sells at around 3,700 flat, we're going to call it. Let me make that red, click the wrong one. Breaking below 3, breaking below 1,700. I'd only be looking for buys here and buys here. If we, because what I'm saying, it's not like it's going to be 100% true. It's going to happen. You know, I'm not some freaking wizard or like I can see the future. So we could possibly see crypto markets just continue up. But compared to market cycles, history, other trading instruments and markets and how they all follow this investment principles, I could not safely tell anyone to buy Ethereum unless we were to clear above the new paradigm price, which is here. Do you understand what I'm saying? Why would I want to tell people to buy now when I see a potential bull trap happening? Right? Where else have you guys seen the bull trap on Ethereum and on this whole way up? We haven't really seen it yet. We've only seen all of this happen. Then we saw the denial stage. And guess what? In the denial stage, crypto gurus, social media crypto traders, they still were pro crypto. Don't worry, guys, scale in more. Hold the dip. Don't worry, buy more. Exactly. That's a great way to put it. Like what Sunny said, crypto is in its baby stages right now. It doesn't have that market history. It hasn't even gone through one of these cycles yet. Okay. And XRP, same idea, but we're actually starting to see XRP a bit more ahead of the curve here, where we actually had a retest of these highs, fails to break at those at the paradigm price point and not returning to normal. And I'm looking for sells on XRP below 1.1 flat. I could only safely look for buys if we come back down to like 0.7 or if we break above 1.3. I'm seeing too many institutional hands getting into the crypto market on the Main Street bank side. I'm seeing too much public interest into the crypto markets. I'm seeing too much media attention for the crypto markets. And it's just due to follow the market cycle, an investor cycle. All right. If we were to come up here again, even still high risk sells there. Sells here. But that's pretty much it. I don't have too much else to say about the crypto markets. Anybody have any questions or anything else? I think that was pretty clear cut. I hope you guys understand what I'm trying to explain here. Nothing is going to escape the hands of the 1%ers who control the financial markets. You know what I mean? Nothing is going to escape that. Gold couldn't escape it and has its upside moves and corrections. Oil couldn't escape it. Stock markets can't escape it. And the public is always the one who gets fucked. No, I'm not holding any crypto. I'm probably going to be waiting for these shorts, and then I'm going to get a crypto wallet and hold crypto if we have the despair stage take place. I know it sounds evil as fuck, but I would love to buy at the despair stage. You know what I mean? It sounds evil, but when the public is in despair and they got fucked in the ass, that's when I want to get a crypto wallet. That's why I'm going to hold crypto and not trade it. I'm going to invest in it. Yes, I want to take advantage of the big short once we come below either at those price points I'm telling you, or once we safely clear the bull trap price point, which is like here at 1.1 flat on XRP. It was at roughly 30K on Bitcoin. And then I forgot, I just told you guys what it was on Ethereum. It's like 1800. All right. So I will be trading it in terms of looking 1700. All right. Thank you, Ariana. It was around 1700 on Ethereum was that bull trap price point. But can't you see how XRP, Bitcoin, Ethereum, they're all following the same market structure? No matter what is technologically happening or innovating in the crypto market, how come no matter if XRP is doing great things to take over the Swift banking system, no matter if more applications are bringing in crypto trading or using crypto or innovating the technology, they're all still following the same cycle. They're all still following the same market structure. Investors and smart money don't give a fuck about technology unless the technology is going to make them more money in their trading and investing, unless it's a new algo for them to use for the next 10 years. Otherwise, they don't give a shit about innovation. They give a shit about money, profits, margins. You know what I mean? We saw the stock market go from 30K down to 18K, have a full stage of despair, and right back up again. You know? Yeah, around 0.7 flat would be a great buy on if XRP will come. Even if it comes down to 0.5, why do we don't give a shit? So personally, I'm going to trade the shorts, but if we do have the despair, I'm not saying this is 100% going to happen. This is my prediction, my analysis. If we do have the despair stage, that's what I'm going to not trade it. I'm going to invest in it. Invest a set amount of money, let it ride. You know what I mean? Okay. Any questions about that? Okay, I'm going to save and upload this and process it to Vimeo. A lot of people wanted me to do a crypto one on YouTube too, so I might put this on YouTube, but maybe not. Probably get a lot of hate from the crypto holders, hodlers. I don't know how to say it. Hodl. I don't know what the fuck they say, man. Too much info for them. Yeah, maybe I'll release it like a week from now or some shit. Okay. So I hope you guys understand that. Hope you guys see my viewpoint, and then those are the price points I'm interested. I'm looking for shorts, and also where I'd be looking for buys across Bitcoin, Ethereum, and XRP. Okay. No problem, everybody. I'm gonna save and upload this, and I'll see you guys in the morning. Our New York session tomorrow, starting at 7 a.m. Eastern, not at like 8, 9, because I gotta go to the mechanic at 10.